Good day, monkeys. I'm Eddie Braverman. That's Midas Mulligan Magoo, and this is episode 23 of Not Safe for Work on WallStreetOasis.com. We've been gone a couple of weeks, and it's great to be back. This week we're covering Bin Laden being put down like a rabid dog, the crash in the silver market, and the upcoming Dunkin' Donuts IPO that everyone is so excited about. So let's get it on. I couldn't believe it at first when I woke up on Monday and saw the news that Bin Laden had been killed in a kick-ass raid by Navy SEALs inside Pakistan. I can't even describe the elation I felt about it at that point. Definitely an America, fuck yeah moment. A couple aspects of this thing really jump out at me. First of all, Pakistan better be ready to give up some of their top government officials, because it's now obvious that they were providing safe harbor for this cocksucker in ways that even the Taliban couldn't. Second, release the photo already, damn it. One of my French neighbors asked me if I thought they should release the photo, and I told her, you bet your ass they should. She said I was such an American. Evidently, the French are a little more circumspect when it comes to the potential consequences of an action before they do it.
Mm-hmm.
I want to see the photo, if for no other reason than to print it out, soak it in bacon grease, and light the motherfucker on fire.
Durka. Alright, so I gotta go Rashard Mendenhall on you over here. So, in spite of my general bloodlust, I didn't get that excited about the news. That's not something I choose to celebrate. Precisely because Bin Laden took such great pride in the taking of American lives. He's dog shit, human filth, and even though taking out the garbage takes the stench out of your place, it's not really something I think is worth getting excited about. I think that not making a big deal out of it is the right message to send to jihadists all over the world. Keep doing your worst, keep blowing shit up, and we'll keep on hunting and exterminating you with cold, emotionless prejudice and precision. I throw out the fuck and just calmly nod. America. Yes. As for your French neighbors, ask them if they forgot Algiers already. It hasn't even been half a century, and how the slave labor of the French colonial empire would interpret her comments. I seem to remember pictures of upside-down hanging pregnant women and bellies getting cut open and nice stuff like that coming out of the French media of the 19th century, so, won't get into that too much. But the real interesting story is that for the first time last night, I had some deep-fried bacon, fried in chicken flour. And that shit was so nasty that it declared jihad on my belly, and I actually understood where the terrorists are coming from for a second. The pictures stay silent. I like the air of mystery, plus it gives the conspiracy theorists some more straw man arguments to build.
All right. Yeah, those guys are off the rails. Well, nobody can say we didn't call the silver action on this show a couple months ago. Midas, I think you were the one that pointed out that folks should enjoy the ride up, but get out the minute the market turns. The silver market crashed roughly 30% over the past 2 weeks. It's part of a broader sell-off in the commodities that saw crude oil and grains come down significantly as well. This might be a point to consider going long again, but it's not a trade for the faint of heart. There's still a pretty massive divergence in the relationship of the price of silver relative to the price of gold, suggesting it either has to go higher or gold has to come down. Gold has fared better through this flash correction. That's kind of what I'm calling it. I don't really consider it much of a flash crash, but a flash correction. So I'm thinking silver might be the bet. What do you think, Midas?
Well, being that I just mentioned conspiracy theorists, I don't want to delve into one of my own, but another thing we mentioned on the show a few months back was JP Morgan's ridiculous position in silver that they inherited from Bears. So don't think that this, what I like to look at as a severe pump and dump, didn't have something to do with that. Actually, yesterday I told a friend about how I was a silver bull for years and years, holding it faithfully in the sub $10 range only to sell right as the rush began. So, as you know better than I do, all logic goes out the window when it comes to commodities, especially anything precious, anything metal these days. So I'm reiterating my previous suggestion, be very, very careful with what you're doing. I mean, sell it if you got it, and if you're buying, make sure it's with money that you're prepared to lose. The last time silver prices went crazy like this, the CFTC stepped in and essentially put a 30-year freeze on the market. I don't expect them to do that again unless the prices get back down into the high single, low double-digit range. So there's still a lot of blood to be shed out there. There's a ton of people that are going to lose a ton more money waiting for it to go back up. Not saying it can't happen. I'm just saying there's a lot of smarter plays you can make. Gold's a great example. A lot of people are going to get back their winnings, and I'm seeing certain things that remind me kind of the tech bubble when people got rich overnight, lost it overnight as well. So silver, stay away.
Yeah. I think a lot of what we saw over the past couple of weeks has to do with the exchange almost doubling the margin requirements on it. So that that chases a lot of people out.
Definitely.
And that certainly the volatility that we've seen is not going to encourage the exchange to reduce the margin requirements anytime soon. So, maybe it will find an equilibrium here. I'm not sure, but it definitely seemed like a concerted effort on the part of the exchange and CFTC to get a handle on on the crazy ascent of silver anyway. I think they raised margin like 80% or something. I mean, it was huge. It was very, very significant. So.
Well, I mean, the CME is basically like an extended arm of the CFTC nowadays.
Sure.
And, so it's bound to happen.
Yeah. All right. Well, everyone seems pretty excited about Dunkin' Brands filing to go public this week. They're the parent company of both Dunkin' Donuts and Baskin Robbins, and they're seeking to raise up to $400 million in their IPO sometime this summer. It's actually a pretty compelling new issue. It's another PE-backed company going public, which we're going to see a lot more of this year and next year. And it's a company that's fairly easy to value, which is also something of a novelty these days in, Facebook and Twitter and Groupon and all the other nebulous value companies. 62% of the company's revenues come from franchisees, and 60% of same-store sales within the individual stores comes from coffee and other beverages, which carry an absolutely ridiculous profit margin. My only concern is how much room is there to grow. 22 years ago, I was wolfing down Dunkin' Donuts in Pohang, South Korea. And, that's 22 years ago. So I think market saturation could be a bit of a problem. Already in the Northeast, there's a Dunkin' Donuts for every 9,700 people. So how many stores can they, how many more stores can they open? What do you think?
Yeah, this smells like a bad duck. Though Dunkin' Donuts is far better established than Krispy Kreme was, you remember what happened to them and how quickly they went from darling to destructive. Recently I was getting some food at a favorite Indian place, and the gentleman from Delhi standing next to me talking about opening up a few franchises over there. And he says that the market is absolutely flooded. So it just goes to support your comment. I really don't think there are too many more markets that they can break into. In general, my feeling is that companies which depend on that franchise model for growth and expansion kind of almost have a built-in mechanism for screwing over franchisees. There's a ton of companies, most notably Quiznos, I believe, and Cold Stone Creamery are examples of franchisee companies that absolutely destroy their franchisees. The franchisees
just put stores on top of each other and stuff.
Yeah, totally, and people just lose money hand over fist. So, the interests of the individual donut shop owner and the global parent company don't always converge. So the numbers are good in one respect, but that 62% you mentioned worried me. And as far as the 60% of sales going to coffee and beverages, it's a good thing, but when those coffee prices spike, crazy shit can happen. So that said, Dunkin' Donuts comes pretty much as close to being a too big to fail company in their sector, but I still kind of question the timing and also why they can't suffer the same fate as Krispy Kreme.
I don't think that they're doing this for some, massive growth, or they're doing it because it's some benefit to the franchisees. That's absolutely not the case. This is Bain getting liquid. This is all about the PE companies that bought them several years ago cashing out. I don't know what they're planning to use the $400 million for.
Yeah.
But this is Bain and, a couple of their partners just getting out of the deal, so.
No, and some of our PE guys should probably get trenched in and prepare for a lot of negative press over the next few years if a lot more transactions like this start happening.
Well, yeah, we're going to see a lot more PE funded companies coming to market over the next 18 months. So, Which isn't a bad thing if you ask me. It's just somebody else getting liquid. But yeah, I'm not sure that Dunkin' Donuts is going to experience explosive growth. I think it's just the guys from Bain making a little money.
Yeah.
All right, you read any good books?
Nah, man, I'm illiterate lately. I refuse to tell anybody about any more good books unless I see some book reviews from our monkeys. So there's their motivation.
Gotcha. All right. I don't really have one either. I'm currently reading 13 Bankers, which is pretty good, but it's more of the same. It's post-mortem on the crisis. So if you're kind of sick of that, give it a pass. But that's it. That's all I got this week. You got anything else?
No. Just enjoying my new background over here, lounging against the wall, and looking forward to some more good discussion in the next few weeks.
Yeah, man, it looks like a booking photo. All right, guys, good to be back, and have a great week, and we will see you next week on Not Safe for Work on WallStreetOasis.com. Take care.
Bye.